Good morning, traders. It is Tuesday, the 2nd of June, 2015, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. I have a bit of a scratchy throat, so if I sound funny, that's what it is. Um, First off, the key news driving us overnight is the Eurozone CPI data. Eurozone May CPI flash estimate came in at 0.3% versus 0.2%. Inflation is already better than expected year on year in Europe. CPI core came in at 0.9 versus 0.7. So as a result of this, we saw the Bund drop. Those numbers came out at 4 a.m. Central, 5 a.m. Eastern. We saw the Bunds drop fairly substantially. They've traded approximately, the Bund has traded 1.17 million already with a 20-day median of about 750,000. It's already well above its normal daily range, heading towards doubling it. So there's quite a bit of movement there. What does this mean? Who cares? This basically is a reaction to this is basically looking at what the ECB is likely to do tomorrow. With this strengthened CPI, quantitative easing has done its job on the surface. It's showing that it has done its job. The euro has popped up. I'll show you that in a bit. The dollar slightly weaker. And because the euro has popped up and yields are higher, equities have taken a drop with the DAX and the euro stocks taking a pretty decent drop this morning. And that's really what's expected when this kind of news comes out. So overall, it's not like it's a crash or anything, so let's not get too excited, but it's a pretty substantial improvement in the situation in Europe from deflation to CPI actually exceeding the expectation. And if you look at the overnight trade in the S&P, you'll notice that the biggest move to the low of 2094, even, I don't know, some of you may have listened to me speaking on daytradingradio.com yesterday for the weekly update, and Paul and I were discussing the idea that it's probably much more likely that we would drop to 2094.50 versus going up to 2127 first. So the overnight low is at 2094, just two ticks below that, which was also the FOMC low from the 29th of April. So that's what's driving us. The secondary thing that's driving us also comes out of Europe. Greece's central bank's head, I won't try to say his name, Stronaras, says a compromise is not far away. With the Greek situation, EU and IMF creditors set to agree on finalizing a proposal to reach an agreement with Greece. So this is looking pretty good for the Friday deadline, and we're setting up for, of course, tomorrow for the ECB announcement, which is expected to be a no change, but the comments from Draghi are going to be very, very important as guidance to move ahead. As I just posted on Twitter, there have been multiple threats against aircraft traveling in the U.S. this morning. This has been refuted by government sources. One aircraft was isolated on a runway in Philadelphia for inspection relating to bomb threats. Philadelphia airline bomb threat was a hoax. Plane cleared of danger. All other threats have been deemed not credible by the government. Somebody's idea of a bad joke. So, so that's where we are. Looking at what we should expect going forward today. We have factory orders. We have a ISM New York, which is like a minor number, but we have factory orders, U.S. factory orders at 9 Central, uh, 10 Eastern, and where the expectation there is negative 0.1%. We have IBD tip optimism, economic optimism index, expecting 49.9, also at 9 o'clock. U.S. durable goods revision as well. And then we're pretty clear as far as economic releases down to the API crude oil release at 3:35 this afternoon. 3:35 is just 15 minutes after the pit open. It's 4:35 Eastern. And then as far as speakers, we've had several this morning. We're looking for Fed's Brainard, a voting neutral Fed member, speaks on monetary policy in Washington. And then as far as auctions, we have a 4-week T-bill at 10:30. So that's what's on deck for today. Let's take a quick look at what's important to us as traders, which are the charts here. Yesterday, the overall expectation was for so where we left the trader bite yesterday was we're opening right in the middle of balance here, right up against this big. So here we've been balancing since the Tuesday after Memorial Day last week, and we've been in this range. And we were opening right against the most valuable price, this thick black line. These thick black and pink lines are what are called the volume point of control, or VPOC. That is the most traded price on any given session. When I combine the sessions to see what's happening inside of these bars over a period of several days, we get what's called a micro composite, or a composite, or a combined profile, which shows us what volume there is at each price and how the market is traded. We're looking inside of the bars here, as opposed to volume per bar. We're looking at volume per price to see how valuable those prices were seen by the market. So yesterday we were opening right in the thick of it, in the 2113, and I discussed the fact that we have had a sell-off. We have had a return on that sell-off. We've tested the most valuable price from the prior week at 24 and a quarter to the tick, and then pulled back, and essentially we're trading sideways into a week full of really important news this week. So coming into yesterday, the idea was that we're probably going to be very choppy on the open, with a coin toss really whether we start to move up towards 2127 or we start to move towards 2094, with 2101.50 being the key target below. And then at the end of the trader bite, I'd mentioned that if I had a gun to my head, then I would tip the odds more towards the short side to 2101.50. And that's basically what the market ended up confirming or proving. We had an OTD open, it tested up and then rotated and drove down. We had a pretty good drive down. We could see it better in my short-term chart. So you can see a little bit of a drive here in the delta, and in price, a pretty decent impulsive move down. We got the pullback, and then we had the completion move. We went 5 ticks past our primary target of 2101.50. We went to 2100 and a quarter, balanced out. It seemed like it put in a weakish. I did not see this as a very steady low, but the market ended up turning around and pushing back into the OS, the opening swing here, the first high and the low put in by the session, and then going back up. This was interesting in that the next level up was 2119, and we stopped 5 ticks ahead of that as well. So we pushed 5 ticks through our first target of 2101.50, and then we came up short 5 ticks on our first target, 2119, up above, and then beyond there is 2127. The way the market closed, there was it pulled right back into the mid and the point of control. It seemed to push itself right back to neutral on this day. So what we have is basically a doji on a daily chart. Um, it's the prior day closed right at 2107.75. This is it closed at 2109, right up against the mid and the point of control. So essentially, the market is back into balance and is neutral, has a neutral bias. It's not a neutral day though; it's a normal day or a normal variation day. So overall, the conditions here did not change at all. We didn't really accomplish anything yesterday. Overnight, though, we did. Overnight, we came in sideways, traded the sideways chop, just pretty much as usual, bouncing off of the opening swing from the prior day, and then at the European Open was right here at the European Open, and then the CPI announcement, we got this drop, and based because it's news and news reaction, we came back to the scene of the crime and have been sideways since. The profile is not telling us very much. Just there's a lot of trading going on at 2103.50, which is a level that comes to us from 2 weeks ago. It was a pretty important overnight area then as well. So overall, we're opening right against the point of control in the overnight session and the middle of the session. Um, what this is saying really is we're trading below where we closed yesterday and where we accepted the highest volume prices yesterday. It's showing some weakness. Let me show you what happened in the euro here. Oh, okay. When I was doing my checkup this morning, I had a target of 21.11.22 in Europe, and it just took it out. It went to 111. The target was 111.22. It went to 111.30. I was going to talk about this being the key target of today, 111.22, but it's already done. You can see here that the euro is taking a very strong bid, really good delta on the euro. You probably don't want to get short this with the news that came out. And then the extreme of this move, or the next important area for this move is 111.80 in this product, 111.80, 111.82 as the next LVN to test. So that's the euro. The dollar's off a little bit. And then the last thing I wanted to show you is what the European markets have done. Here's the Bund. It took a turn down yesterday, closed the point of control very beautifully, and then it finished the day on its lows. The expectation was for continuation lower, and then this morning, as soon as it opened up, it continued lower with a big drop on the CPI data, and then a continuation move that has occurred here. So overall, very orderly trading there in the bunds. Very heavy volume, very heavy volume there. And then to look at what it has done in the European indices, here we go. Here's the DAX. A point in the DAX is worth about $32. It trades in two tick increments, but it moves very quickly. And you can see here again that the European markets are dropping. The Euro stocks have actually accomplished what was expected, which was to break higher away from the point of control and come right back to it. The target below from yesterday was 35.47, and it took it out by a tick yesterday at 35.46 and is now trading around it. So it's back to basically where it was before. It's in this balance zone, this balance area. So important to identify where balance versus imbalance is. I think I'm running out of time. One thing I want to remind you of, so the primary hypothesis for today on the ES is responsive buying towards 2107.75, 2109. I expect that responsive buying to fail. If it does, if we do get any responsive buying overall, looking for a retest of 94.50 and the overnight low more so than a test of the overnight high. Beyond there, the key over underline is 2083. 2083 is the key over underline in this area. It comes to us from the monthly chart. I showed you that a few weeks ago. How we're in a big volume area right up here, and the cutoff in between them is 2083. So that would be the key target below. Initial target is the 2094.50 this morning. So the primary hypothesis is if any responsive buying up, and then I expect selling to come in to push us down to 2094.50. The secondary hypothesis is it drops right away, comes close to 2094.50, not able to get down there. It finds buyers and it pushes through, and then the key target becomes 2119 for the session. So those are the two key scenarios. One last thing I wanted to discuss here. Uh, a lot of people are going through, and I know this from our chat room and stuff. A lot of people just go through week after week after week of basically stagnant, what I would call stagnant development. It is so important for you, in my opinion, to make sure that you are improving on something on a week to week basis. What are you working on this week? What aspect of what you're doing are you working on this week? Don't waste another week. What you'll find is over time you may make very few strides and therefore are unable to justify sitting at your computer all day, or justify that to your wife or significant other or dependent, why you're sitting at home while they're going to work and busting their butts. And if you're not improving incrementally, even if it's just a tiny little amount, every week, you're not growing every week. So it's really important to have some sort of have an idea of what you're working on this week, and you cannot do that without a proper journal and properly tracking your performance, so you can identify areas that need improvement and then go ahead and start pushing towards improving those areas. I'm way over my time. I'm going to leave you with that. Good luck. I'll catch you tomorrow, and see you later. Bye.